What is BOOT in a 1031 exchange? Have you ever wondered what happens when you sell an investment property and don't reinvest all the money? This is where the term BOOT comes into play in a 1031 exchange. BOOT refers to any property or value you receive that is not considered like-kind property. This means it does not qualify for tax-deferred treatment under Section 1031 of the United States Tax Code. When you receive BOOT, it can trigger a taxable event because it represents value that you did not reinvest into a qualifying replacement property. There are two main types of BOOT you should be aware of. The first is cash BOOT. This occurs when you receive cash or other non-like-kind property as part of the exchange. For example, if you sell an investment property for $100,000 and only reinvest $150,000 into a new property, the remaining $50,000 is considered cash BOOT. This amount is subject to capital gains tax since it is not deferred by the exchange. The second type is mortgage BOOT, also known as debt BOOT. This happens when the mortgage debt on your new property is less than the debt on the property you sold. For instance, if your original property had a mortgage of $200,000 but your new property has a mortgage of $100,000, the $100,000 difference is mortgage BOOT. Even if you reinvest all the sale proceeds, this reduction in debt is treated as BOOT and is taxable. BOOT can also include other forms of non-like-kind property, such as personal property or notes received during the transaction. From a real estate investing perspective, managing BOOT is essential to maximize the tax deferral benefits of a 1031 exchange. Many investors work with qualified intermediaries to structure their exchanges. This helps ensure that all proceeds, including mortgage liabilities, are properly reinvested into like-kind replacement properties. By doing this, you can minimize or eliminate BOOT and fully defer capital gains taxes. In summary, BOOT in a 1031 exchange is any value you receive that is not reinvested in a like-kind property. This often includes cash or debt reduction, which becomes subject to immediate taxation. Understanding and managing BOOT is a key consideration in real estate investment strategies involving 1031 exchanges.